Oh shit, so expensive this market यार. It's very bad. ऊपर से इतना volatility है. क्या करें?
I'm sure this happens with everyone. Like markets are on a high, but we have basically nothing to buy. अरे ये तो rhyming हो गया. Markets are on a high, but we have nothing to buy because the stock prices are volatile, so we watch with a smile. The bulls may charge fast, but their gains won't last. We wait for the dip and then we tighten our grip. क्या बात है, बहुत बढ़िया, बहुत बढ़िया. Anyways, today's topic is beyond poetry, something more relatable, as many of us investors have been indecisive in the past week and month, and there are definitely a couple of reasons that I can think of. So basically, there's valuation, which I think is still pretty high for many stocks, and sometimes even I really struggle with my newsletter to find affordable companies. And secondly, there's the volatility factor, which has jumped a few notches thanks to everything that's happening in the Middle East. My point is, it's probable you are presently not actively investing and that either your money is right now stashed in your bank savings account or else you've actually redeemed some part of your most profitable stocks anticipating a correction, and those unutilized funds are showing up in your trading account as available margin. Now, the thing is, you don't get any returns on this money, and while keeping it in a savings account is an option, it's also very inconvenient to withdraw money, add funds, ऊपर से नेट बैंकिंग ट्रांसफर्स के लिए 9 rupees plus GST देना होता है and all that stuff. I'm sure you've also gone through this phase yourself, and I'm hopeful this video offers you a solution as we learn more about the Nifty one-day rate index, what it is, how it works, what's a liquid ETF, the key features, benefits, how does it help investors like us, how to invest in them, and you would have noticed a bunch of ETFs coming with a suffix, something like the Groww Nifty one-day rate liquid ETF, which is specific to the offering by Groww AMC, and I think this is the latest one in this category. And then I'll also take you through some concerns, some risks, the tracking error, portfolio taxation, and much, much more. It's a very practical, useful kind of a topic. And if you don't know anything about the Nifty one-day rate index and related ETFs, then I'm sure you'll find this video very useful. Let's begin. Let's start with an understanding of this term liquid ETF. So very simply, these are instruments that invest in securities with a one-day maturity. So things like tri-party repos, repos in government securities, reverse repos, and other overnight securities. Okay, because I've used this word repo a few times already, let's quickly understand this. Now, financial institutions like a bank often require a short-term loan to balance their assets and liabilities, that is, have some parity between the deposits they take in and the loans they give out. To enable this, the institution gets into a financial arrangement that's called a repurchase agreement or repo, and it involves the sale of government securities by, say, a bank to another institution, like another bank or a mutual fund, with an agreement to repurchase them back after a specified period, which in our case is exactly 1 day. In doing so, the institution that owns the securities and needs cash would sell these securities in the initial leg of the transaction with a promise to repurchase them later. On the other hand, the buyer who has cash to lend would buy these securities with an agreement to sell them back to the borrower at a future date, earning interest in the process. This borrowing mechanism is commonly called as TREPS, or Treasury Bills Repurchase, and remarkably, all this is happening over a single day, that is around a duration of just 1 day, making this transaction very safe for all parties, including us investors, and it also earns income in the process. The fact is, repos are widely used in India's money market to manage short-term liquidity needs, and with institutions like banks involved, a liquid ETF, which comprises almost entirely of these repo instruments, comes out as a super safe alternative to park one's money. Given the liquidity and ease of buying and selling, it functions like cash. It offers us potential returns, and for retail and institutional investors, they help manage the transition between equity and cash in a smooth manner. Actually, let me explain the smooth transaction part with a simple example. So scenario 1 is where you sell 1 lakh rupees worth of stocks today, and typically what happens is at T+1, that is the next trading day, the stocks get debited from your demat account. The net proceeds from the sale are credited to your margin account, post which you will either ask for a payout into your bank account or the money will be lying idle in that margin account. So essentially, if you take this money into your savings account, you earn very little, 3-4% in most cases. And if you let the funds stay idle in your margin account, then you make nothing from it. But instead, and this is scenario 2, wherein on the day you sell your stocks, If you had also bought liquid ETFs, let's say units of the Groww Nifty one-day rate liquid ETF, then you can earn returns on these units from the first day of credit. And when you find a new stock to buy 3, 5, 10 days from now, then you can sell your liquid ETF units and use those proceeds to make the purchase. Of course, in those 3, 5, 10 days, the Groww Nifty one-day rate liquid ETF would have invested your money into one-day securities, that is the repo part that I mentioned earlier, and these securities would have earned some interest for you. So not only do these liquid ETFs act as a temporary parking space for your money between stock trades, they also keep your cash working for you even during the short-term periods of inactivity between trades, instead of your money lying idle and not earning you anything. If the concept of not keeping your money idle sounds practical to you, which I'm sure it does, then let's quickly understand the Nifty one-day rate index, which is the benchmark that all liquid ETFs use, including the Groww Nifty one-day rate liquid ETF that I mentioned earlier. So the Nifty one-day rate index represents the overnight interest rate, or the rate at which Indian banks lend to each other for a single day. It's based on the overnight call money rate. Remember, I explained how banks lend to each other for a short time duration. It's the same thing. And what this index does is that it calculates a weighted average of overnight call rates based on actual market transactions. As to where these rates are published, there's this platform called the Triparty Repo Dealing System, the details of which are available on the Clearing Corporation of India's website. Actually, if you want more information on the Nifty one-day rate index, I'll suggest you read this document here, somewhere around page 250, for a better idea on the composition and the calculation methodology. In terms of performance, the Nifty one-day rate index has delivered between 5 and 6% on a trailing basis. But when examined on an annual basis, and if the COVID years are ignored, one observes that this index is loitering more around the 6.5% mark. And that's probably a good expectation to have in terms of returns when investing in a liquid ETF. So figure this. On one hand, you have 0%, which is what you get or you don't get for keeping your money idle in your trading account. And on the other hand is the super safe index, which historically has been serving up between 4 and 7% on an annualized basis. In fact, when I crunched the numbers, I noticed that in over 2,400 observations, so that's the 1st of April 2014 until the 30th of September this year, there have been zero instances of this index giving a negative return on any single day. I mean, look at this graph here. If one isn't careful, you can even mistake it for a nice long straight line, which shows how safe this index is. Of course, this might not be the case every time, as in I can't give you a 100% guarantee that every trading day will be a positive, but this is good evidence that this index, and by extension, the liquid ETFs that are benchmarked against this index, will tend to offer positive returns on most, if not all days. Okay, so let's see how one can invest in this, and what we're looking for are ETFs that go with the suffix Nifty one-day rate liquid ETF. There are a bunch of them now, and as we saw earlier, these ETFs serve a clear purpose in terms of better management of idle funds. They help transition between equity and cash within the same settlement, and because it acts as a cushion against volatility, which is how I started this video in the first place, it's why I think such an ETF is suitable for all types of investors, because we all need to park our money in some form or the other at different points in time. In terms of benefits, firstly, liquid ETFs potentially carry a lower risk, as a bulk of the assets are invested in safe instruments like triparty repos, in government securities, reverse repos, treasury bills, etc. And as added proof, the riskometer also shows it under low risk, with relatively low credit risk and low interest rate risk as compared to other debt products. A second benefit is in the form of high liquidity, and because ETF units are traded on the stock exchange, it allows for quicker conversion to cash as and when needed. Thirdly, the Nifty one-day rate liquid ETFs have very transparent structures offering daily disclosure of portfolio holdings. Then there is no STT in liquid ETFs, that is no securities transaction tax, which further enhances its attractiveness for investors. If you opt for the growth option, then the interest earned is reinvested into the ETF, allowing the NAV to grow over time, which results in higher after-tax returns since taxes apply only when the units are sold. And finally, these ETF units can be pledged as collateral for margin trading with a low haircut of around 5%, which means 95% of the pledged value can be used as margin, providing much needed flexibility for traders. So there are a bunch of benefits here, and just to not forget some of the niggling doubts, firstly, every ETF, irrespective of the fund house, will definitely have a tracking error. It's a topic I have covered extensively in my video on ETFs for beginners, but since this category is a bit new and all schemes are just a week to an year old, the tracking error will take some time for it to stabilize, being a function of multiple variables including the AUM, expense ratio, volumes, etc. A second common concern is the expense ratio, and yes, this is something one has to be mindful of, with some schemes having a low number of around 0.2%, while some ETFs are hovering around the 0.7 mark. So that's a big difference and is therefore something to watch out for. The exit load is another important factor, especially because the Nifty one-day rate liquid ETF is not something investors or traders park their long-term money in. So if the parking time is, let's say, 5 days, then surely you and I won't want to lose any money in exit loads. And thankfully, while the exit load was nil for all the schemes that I checked, it's still in your interest to do a second check specifically to your preferred scheme. With regards to minimum investment, one can buy these ETFs during trading hours in as low as lots of one, as I recently did with my purchase of units in the Groww Nifty one-day rate liquid ETF, and that's listed on the NSE under the symbol Groww Liquid, that is GROWWLIQID. Another common question, is there a lock-in period? No, there isn't. Simple answer. And finally, there's taxation. And although I'm not a tax advisor, I think the recent budget hasn't made any difference to debt ETFs positively or negatively, especially in the context of these liquid ETFs, which are generally short-term parking solutions. But I might be wrong, so please consult a CA or a tax consultant. And please feel free to correct me if I got some part of this incorrect. Right, so there you have it. Everything you need to know about the Nifty one-day rate liquid ETFs and how it provides investors with a unique opportunity to park their idle cash in a low-risk, high-liquid asset. Together with benefits such as flexible trading, daily transparency, absence of STT, etc., I'm certain many of you will want to explore this instrument as a short-term saving solution, irrespective of whether you invest in stocks or not. The Groww Nifty one-day rate liquid ETF is available on all major stockbroking platforms. So do check that out. And if you know anyone who might find this information useful, then do share this video with them. Once again, thank you for your time. Please like this video, subscribe to my newsletter, and I'll see you very soon. Until then.